Hello, and welcome to the Investing from the 9 to 0 podcast starring Josh Jansen. Today we're going to cover Yum Brands. In this podcast, I'm going to specifically cover the background information on the company, more so what they do and their company statement, their fundamentals, the upcoming earnings reports, the company's various prices, and the competitors, as well as the top news stories. To start, the company's symbol or stock ticker is YUM. Their company statement says, Yum Brands Inc. operates a service restaurant company which engages in the development, operation, franchise, and license a system of restaurants. It operates through the following segments: KFC division, Pizza Hut division, and Taco Bell division. The KFC division segment comprises all operations of the KFC concept. The Pizza Hut division segment operates the Pizza Hut concept. The Taco Bell division segment includes all operations of the Taco Bell concept. The company was founded in 1997 and is headquartered in Louisville, Kentucky. The company's fundamentals, and starting with specifically, what does price to earnings ratio mean? Well, you can go back to my first podcast where I explain it a little bit, or you can tune in to my next podcast where I will be talking about why investing is important and going over some key things having to do with investing. The price to earnings ratio of Yum Brands is 25.21 times. That is greater than 66% of the other companies in the restaurant and bar industry. Their price to cash flow ratio is 61.56 times. Their profitability, more specifically their gross margin, is 49.46%. Now this is about what you would usually see with the rest of the restaurant and bar industry, and it's more comparable to other companies such as Papa John's or Domino's or Chipotle. What this also means is that the company has the same amount of cash to spend on business operations as compared to its peers. Now, the specific word or the key word in that last phrase was cash. This term is outside of the finance world thrown around and not used very carefully, while in the finance world, it is used in very particular cases. Cash is specifically used to describe the amount of cash the company has on hand to modify or do whatever they want with that specified amount of cash. Not their revenue, their cash. Moving on to their net profit margin. Yum Brands' net profit margin is 19.89%. So that means Yum Brands controls its costs and expenses better than 97% of its peers. That is incredible control over the actual costs and expenses of their operations. They operate in over 150 countries with, I think, over 15,000 locations. Yum Brands' dividend is 2.09%. That is also, again, comparable to its peers in the restaurant and bar industry. Moving on to the earnings report, the analyst projected earnings of 66 cents per share on April 29th, 2020. Yum Brands failed to meet their expectations and released their earnings of 64 cents per share. They are projected for next quarter 47 cents per share. In my opinion, this is about where it should be. The restaurants were hit pretty hard in the coronavirus era, but the big chains with access to drive-through and their takeout options were able to retain some of their frequent customers through the coronavirus. Moving on to Yum Brands prices. Today, on May 28th, 2020, Yum's final price was $90.85 per share. The 52-week range of Yum Brand's stock price is $54.95 at the low, which occurred on March 23, 2020, and its high at $119.72, which occurred on July 1st, 2019. Yum Brand's top competitors include really any restaurant, local or nationwide, but the main chain competitors that they face are McDonald's, Dunkin' Brands, Wendy's Company, Texas Roadhouse, Chipotle and Qdoba, Domino's Pizza, and finally Chick-fil-A. The major competitors of those select companies that I just listed that would take away from the Yum Brand's market share is McDonald's, Wendy's Company, Domino's, Chipotle, and Qdoba. Domino's would specifically affect Yum Brand's Pizza Hut division. Chipotle and Qdoba would specifically take away market share from the Taco Bell division, and Wendy's and McDonald's would both take away from the KFC division. Moving on to our final topic, the top news stories that is affecting Yum Brands. KFC is going to release a newer version of an old chicken sandwich that they used to make. The only new thing about the sandwich is that it's going to be a little bit bigger. What I think is that they are too late to the chicken sandwich party because all the other chain restaurants like Popeyes and Chick-fil-A, they already pounced on the market share when the entire hype train last year over the summer was occurring. The next headline is Taco Bell is going to hire 30,000 workers for the summer. They're trying to tackle the demand for their Taco Bell food through the drive-thru with these new workers so they can stay up with their demand. Moving on to our final news topic of this week. Most chain pizza delivery companies are booming due to the stay-at-home orders across the country. If Yum Brands reports that the Pizza Hut division is not staying competitive during this period with these other pizza chain restaurants, it will hurt the outlook of not only that branch, but for the company as well. This can be a big hit towards Yum Brands because if they lose market share in the Pizza Hut division, they will be missing out on lots and lots of potential revenue. Next week, I will instead be producing a more educational episode on why investing is important, as well as some other questions you guys might have. Comment below some questions you have about investing so I can answer them in next week's video. Make sure you like and subscribe, and I'll see you guys next time.